and gentlemen, and welcome to SRP Americas 2021 in this panel discussion that will look into product trends in Latin America. Buenos días a todos y bienvenidos a la conferencia SRP Americas 2021. My name is Agata Skripczak, and on behalf of SRP, I wanted to thank you all for joining us today for this conference. Muchísimas gracias por estar aquí con SRP hoy. This session will be moderated by Liliana Figueroa Quiros, Executive Director in Structuring at BBVA Mexico. Please note that the panelists are happy to address any questions from the audience, which can be asked using a chat box in the right bottom corner of your screen. Now I will hand over to Liliana and our speakers. Muchísimas gracias, Liliana.
Hello, everyone. First of all, I would like to thank SRP for the kind invitation to moderate the panel on product trends in Latin America, in which we will discuss how portfolios are adjusting to the challenges that our region is facing at the moment, be it inflation, the political environment, and the different trends in volatility. So I should start by welcoming my colleagues from Peru, Brazil, Mexico, and New York, and maybe let them introduce themselves to the audience. So Luciano, maybe we can start with you.
Yeah, that's okay. Hi, everyone. Thanks, Liliana. Hi, everyone. It's nice meeting you. Nice being here again at an event of SRP. I'm Luciano Angelo. I'm the head of market products at Itaú Unibanco in Brazil, and trading all products for client investors as retail, private, and corporate segments.
I can go next if that's okay. Buenos días. My name is Roberto Rosas. Thank you everybody for joining in and calling in. I am a vice president in global markets within Credit Suisse, covering Latin American offshore and onshore for investor products and structured products across the region.
I'll go next if you don't mind. Hi everyone, my name is Damian Vera. I'm the head of structuring in Monex in Mexico, and I'm very happy to be here with you guys.
Hello everyone. It's a pleasure to be once again here in this event of SRP. My name is Steve Ocampo. I am the CIO of Zest Capital and executive partner. We are an asset manager with high expertise in structured notes. We have 150 million assets under management, and we also are a financial education promoter. Thank you, Liliana.
Thank you, everybody. So I guess we will start talking about inflation. We were thinking about leaving questions at the end, so we will leave approximately 10 minutes to discuss topics from the audience. And so regarding inflation, just to give a brief context of what we have been going through. Well, we all know inflation tumbled last year due to COVID as a result of the plunge we saw in demand. And then we also had problems with output. But basically, by the end of the year, all the main LatAm economies had inflation within their own target range. This year, we have quite a different story. We even have headlines saying food inflation is in overdrive. Do you perceive your clients are concerned about the global inflation outlook? Maybe we can start with Luciano.
Yeah, okay, thanks, Liliana. It seems like when we talk about inflation, I feel like I'm repeating an old story that I think I've told some years ago at one of these events. Because when structured products were first regulated in Brazil, one of our main strategies to offer to investors were structured notes that protected them against inflation and gave them some leverage. Because at that time, back in 2014, we had a scenario with high interest rates and inflation picking up. So we saw that as a good strategy, and it proved over time to be a good one for investors because most of them have benefited from this scenario and got extremely interesting returns on that. But that time had passed, the economic cycle has changed, and then we moved into a time with controlled inflation and extremely low interest rates at least for Brazilian perspective, But we feel like it seems like we're maybe going into the same cycle again, because inflation is picking up definitely, and now we have interest rates also going up. The central bank is of course is acting to control inflation. As we have inflation target here in Brazil. So it seems that we might see that story repeating again. And as a strong player in the Brazilian market, we believe we might find good opportunities to structure notes to give investors the protection they need against inflation, and also give them some leverage to have better returns on their portfolios. So what we see now is, I think investors are starting to pay more attention to that. I think inflation was not something that was really on the target back a few years ago. But we believe that might be an asset class very important to offer products and to give investors a better chance to adjust their portfolios.
Damian, do you see the same feeling in Mexico? Like we've been through this before?
Yeah, well, honestly, like in the last couple of weeks, every time I speak with a client, they all ask about how we think inflation is going to behave next year. Everybody's concerned about this topic. And as we said before, well, this also has an impact of interest rates. As you all know, Banxico started hiking our interest rate on last June. We've had 2 hikes so far in this year, and the market is expecting another 2 hikes within the next couple of months. This affects our entire environment in structuring as interest rates are going higher, but I also are getting higher. But I also wanted to point out the tax in Mexico that has been also changing a lot in the last couple of years. Just to give you an idea, in last year in 2020, we had a withholding tax in Mexico for our products of 1.45%, which was cut for this year to only 0.97%. And I've been hearing in the last couple of weeks that the plan for the government is to cut this withholding tax even further to 0.06% for next year. So even though that the hikes that the central bank has been doing in the last months haven't been as aggressive as inflation in Mexico, I think this withholding tax cut that we will have next year will definitely benefit our clients to their final results in their portfolios.
Okay, Steve, what do you perceive in Peru? I mean, tightening monetary policies are going to continue throughout the region, and inflation will be in control, or this will be like a trend that we will see for the next years?
Yes, thank you, Liliana. I will complement, so I don't go by the same thing that my colleagues has mentioned. But in Peru, the main 2 effects that have affect inflation here, the main reason one is the exchange, the currency. We had a high increase in the currency, almost like 12%. And I mean, that is a direct impact in most of the consumer goods that we have here in Peru. So that has put a lot of pressure into the central bank to how to manage that pressure on that side. And also talking about global inflation, we have the same issues as every part in the world. The shortage of the supply have put all these constraints, and also the ports increasing prices with all these issues have also affect all our imports. So I think those 2 things are the main drivers about inflation in Peru. So what the people in Peru and our clients abroad in the region have been doing is going out of the local currency investment they have and migrating into more hard currencies. So they have like a partial hedge going to hard currency because of the local currency going higher. But still the main concern in here is looking into alternatives that doesn't have this noise in terms of political, and I think maybe we will also discuss that part. But talking about inflation, they have increase the demand in products that have this yield enhancement in the structured notes. So yeah, we have seen a lot of increase in hard currency investment, especially on those yield enhancement products.
Roberto, what is your take on this topic? I mean, you see clients throughout the region, so what do you think?
Yeah, so I would start by saying that I think inflation is something that is not new necessarily to people from our region. I think like most of us grew up probably in a country which at some point, at least in our maybe early and maybe not so early childhoods, we had inflationary pressures, and this is something that we grew up with, which is something different than the US client base, right? I think last time the US actually had inflation was around the 70s or 80s. So I think when you start seeing headlines about inflation coming up, not only in local markets, but also here in the US, I do think that the LatAm client base gets more worried compared to the US client base. So if I compare the number of conversations that I have in this topic compared to my colleagues that just focus on the US, is night and day. I'm constantly hearing clients asking about tips, exposure, stocks of single names that might have benefit from an inflationary pressure, and just to name a few types of products that we have seen in the last few months. So I do think I'm not a macroeconomist necessarily to see if this is real or not, but I do see more concern from in our region in this topic, especially compared to the US clients, which see this more as transitory.
Okay, thank you. So Steve talked a little bit about the topic of the political environment. So I think we could move on to that to discuss what is happening in the region. And I remember that 2 years ago in the conference, when we still had the conference in Chicago, we were talking about the future elections that were going to happen throughout Latin America. It was Mexico, Peru, Brazil, etc. And there was even like a bit of a feeling that in some countries we would start an era of like, I was even joking, like winter is coming. And then something, I mean, winter did come, but for a very different reason. No, we had COVID hit our countries quite hard. So now we have these combined effects. We have the political environment, like sort of divided societies, and then we have experimented all of those devaluations in our currencies. No, and this week has been especially volatile. So with elections specifically, during this year, how are clients' portfolios adjusting? Do you see, well, Steve talked already about hard currency exposure, but do you see the risk of tone is getting stronger at this time? Maybe I will turn to Steve since he started this conversation.
Thank you, Liliana. And the answer is yes. I mean, what the clients broad-based are looking first in Peru. I mean, like we were used to these political noises from governments, less wind tilted. We look at our neighbors and we saw a lot of governments having those issues, especially recently in the last 2 years, Chile. So, I mean, like in Peru, we usually import a lot of things on the political side that they do in Chile. And so the bad things start to occur the last 2 years, and we have imported all that noise. And also with all the disruption that we have with, I mean, like we had like four presidents in less than 5 years because of all the issues of corruption and also different matters inside Peru of political confrontations. So that created a lot of instability, and that also weakened a lot of the right parties. And in this election that we just had, we had like more than 15 right parties with different type of policies, but all trying to do into a center right wing things. But that didn't help because, I mean, when people went to put their vote, they had many choices on the right. So there wasn't a right consolidated, and the left wing had only 2 choices. And so that was one of the main constraints. And because of all these conflicts that I mentioned you, that the last 5 years have been a disaster for right governments. Well, Castillo won the elections, a very tight election. I mean, like you can tell that maybe there was a fraud, maybe not. However, I mean, Castillo is our president, and the thing with Castillo is not that the problem is that he's left wing. The problem is that the capabilities of our president and also the team, the ministers that he have, doesn't show really high capabilities to have a decent government. I mean, like, so that's the issue that is the main worry about the people. Not that it's left wing, it's the capabilities. I mean, like, they don't look very well prepared because you look at their curriculum. So it's kind of like hard to believe that the odds to have a very good government will be good. And all this in terms of the clients have worry about their local investment. I mean, like, if you look 2020 and before, the last 7 years in Peru, there have been a lot of penetration of different type of investments in Peru, and many are local, like leasing, private debt, private equity, all factoring and different type of investment opportunities. However, this change of government have made that start to go away from local investment, change their currency from local to hard currency. And also what matters for them is where is the money? I mean, like, a lot of clients doesn't want to have the exposure locally. So they are trying to find alternative on the region or in the United States, where they can have a foreign custody of their assets. So they feel more comfortable with that right now because of the high uncertainty about the government, what they're doing. Also, we don't know if our president of the central bank will still be there. I mean, there's elections in November. The government haven't had a right gesture right now with our president, that is Velarde, and he's really good. If he doesn't continue, that will also create a lot of instability. So the interesting thing in Peru is that you see the stocks bouncing, but the FX is still being hurt. So, I mean, like, you can choose. I mean, I think that the FX have more institutional investors that have a more conservative view about Peru, while the stock exchange is more retail, trying to take the opportunity that is very, very cheap, Peru, but I mean, it's cheap because of something. But just to wrap up all this, sorry, I had to give all this context is right now the clients are trying to look into alternatives that are in hard currency, especially in dollars, and that they doesn't have any relation with LatAm or Peru. I mean, like, they're also very frightened because of the whole region is migrating into this left wing consolidation. I think we also probably will talk about Brazil. Brazil has the same risk coming towards next year. So basically, what we are doing with clients is making investment in the international world, not Peru, not regional, hard currency, and also our funds that we have mainly. All our funds had custody local. Now we have migrated those custodies into offshore. We have it in the US right now. So I think with that things, we're trying to mitigate, give more security to our clients, and be with them, right? I mean, like, understand the risk and be with them, trying to fix and mitigate all these variables.
Okay. Before we talk about Brazil, which you mentioned, I would like to go back to Mexico, because we had elections some years ago, and we have had a left-wing government for some years now. We recently have had elections for part of the house, the lower house. And Damian, do you because we've had like a bit of an advance of what the rest of the region could go through. What do you think your clients think now about these decisions that they have to make about, do I keep the money in Mexico? Do I go abroad? Or do I take advantage of higher rates in Mexico and the volatility? So what have your clients been doing? Are they taking advantage of the low volatility that we experienced these past months, not this week, but the past months? Well, basically, what is that they are? How are they adjusting to this environment?
Yeah, well, thank you, Liliana. What Steve just said is what we just experienced a couple of years before when our current president was elected. We did saw a lot of clients very scared, trying to move to dollars and taking their money out of Mexico. However, as Liliana just mentioned, as the government started going on and they saw that things were kind of the same as before, I think confidence in Mexico started to come back, and many of them started coming back, especially since we had higher rates. In terms of volatility, as you mentioned, well, last year we had this huge spike after lockdown, that when volatilities all around the world spiked, and we are very active in dual currency deposits, so we could give very, very attractive rates. And even though the risk was high, there was a lot of demands for this product. So we had a very big demand, especially on the second and the third quarter of last year, of these kind of products. And as volatilities has started getting low for the last part of the year, and pretty much this whole year, we've been having a dollar peso trading around 20 pesos per dollar, which has been quite boring. We've seen a lot of clients taking advantage of that and going to capital protected products. We used to issue a lot of range accruals, but in this new environment with low volatilities, but also low interest rates, we had to move to a little bit more aggressive products, such as the double no touch and the wedding cake. And it's been very, very, very impressive how demand of this product has grown. From, if I compare the first semester of 2020 to the first semester of 2021, we've had a 29% growth in demand for this kind of products. So I think clients are taking advantage of these low volatility markets.
Okay. And Roberto, since you are in New York, based in New York, are you seeing this flight to quality around the region?
Yes, I mean, I think from the distributor perspective, I think it's quite evident that a lot of assets have been captured in offshore jurisdictions, US, Uruguay, Panama, etc., where a lot of local assets are being transferred away. And I mean, for some clients, I'm sure it's going to be just that's where they want to save their money, and for a lot of them, I'm sure it's just they're scared and they want to, given the different political realities of their market. So I think a lot of the private banks and regional banks and broker dealers have captured a lot of assets. They're trying to replicate some of the payout or might be used to onshore, right? So you mentioned wedding cakes. This is like something that I traditionally didn't hear much about here in New York, but recently some clients have been asking about this type of payout. So that's probably some assets that came to the US. So yeah, definitely have seen some increase in demand in the offshore markets.
Okay, and last but not least, Brazil. Luciano, well, this is a big year for you. This in terms of political decisions, right? So and the real has been behaving a bit different in the past weeks, at least. From the Mexican peso and so on. So in terms of volatility, so what are your clients doing? Are they also exhibiting this flight to quality behavior as the rest of the region, or they are on on a world on their own.
It's interesting. It's like, I think, as Roberto said regarding inflation, is that we are somehow used to that in the region. And I think when you talk about the risks involving politics, it's more like the same. I think it's difficult to see a very stable and calm scenario in Latin America in general. In Brazil, it's no difference. So it's like we always have politics around, and we need to pay attention to that to take care of the client's portfolios and make the adjustments necessary. And as you mentioned, I think we have an election next year. It's obvious that everyone's is already talking about that and checking perspectives, but it's still a long way to go. You know, it's like it's difficult to predict something 1 year beforehand, because a lot can change, a lot of things can happen till there. So I think investors are still looking more at the market right now and the effects of the economy, about regarding COVID, regarding inflation. And I think these topics are let's say, are capturing the attention of the investors, sometimes even more than politics. We know that politics, the election is coming up. I know it will affect and reflect on the market prices, but we still around COVID discussions and how the economy can recover from that. But the good point of the situation is that I see that the market in Brazil has developed a lot, looking at the capital market, and new products come into the place, which is good because they offer investors more alternatives to adjust the portfolios and get protection for those who wants to be more protected, or maybe to go to more risk investments if it's the let's say what the clients want, what the clients need. But in general, what happens is that we see the portfolios more balanced between local exposure and international exposure, not only on hard currencies as US dollar, but also on global assets, which give them a more balanced portfolios and give them also protection, but as well some exposure to markets that offer some good growth perspectives. Like not only for individual investors, but you can see asset managers have changed their portfolio allocation, and we see a lot of asset managers investing a higher percentage of their portfolios, of their asset under management in international markets, not only US, but also Europe and China and Asia in general. So I think the conclusion, if there's a conclusion, that is like, in summary, it's like it's important to have a balanced portfolio. It's always, I would say, it's always nice to have some hard currency on your portfolio, and allocate not only in reais, but have some US dollars and some, you know, some diversification. It's good because I would say volatility is always in place in an emerging market like Brazil. So it's good to check the opportunities you have here and to check what's happening around the globe, so you can get a better balance between protection and growth opportunities.
Okay, since you mentioned more alternatives, we can move on to the topic of innovation. And basically, one of the main findings of the SRP buy-side survey 2 years ago was that respondents wanted more product innovation. And so could you give us all an idea of what sort of new products have you been working on? I don't know if who wants to take this question first.
I may start. I think I mentioned something on capital markets. It's like we have seen some maybe not only innovation, but I know the growth in Brazil within capital markets, like even fixed income products like local bonds. When the credit market was not well developed for individual investors as we see right now. So this is a change. Maybe it's not something extremely new for global markets, but I would say in Brazil, we didn't see a lot of individual investors exploring alternatives with the credit exposure. Mainly the investments are only on banking alternatives and not corporate bonds, for example. So this is something new. And in this market, we still expect, let's to give an example to all of you, we are still expecting the central bank to regulate so the CDS and the credit and the CLN market in Brazil. We still don't have a regulation for a credit linked note in Brazil or a credit default swap product. They are still very restricted to the financial market. And we expect the regulators to come up with a new regulation and to open the alternatives for us to offer local investors products that we can find anywhere in the world, but we still don't see that in Brazil. So this, for us, would be kind of innovation. For a lot of you guys, it's like, oh, it's the same we have here for a long time. I understand that, but you know, it's important for developing market to bring those things into place. And that's for the product. When you talk about innovation, but I also see a lot of innovation, a lot of discussions, not only on the product side, but also as a service side for investors. You know, like how can we use technology and new tools to give investors access not only for the products, but also for a better service, but also tools to educate the small investors to understand about the market and to give them alternatives. So all these new technologies we see, I believe that they help us a lot with tools for pre-trade, tools for post-trade, tools for the clients understand what does it mean when someone tells them to have a diversified portfolio, how they can follow the portfolio movements along the way over time. So it's important to talk about that. We see a lot of things. We at Itaú are also developing a lot of new tools for investors. We recently launched a new investment app for our clients, so they can check on the alternatives they have on investments. They can check about news, information, and we also, I would also like to note that we have in Brazil the regulators moving in very strong position on open finance regulation. So open finance concept in Brazil, it's taking place already, and for the investment marketplace, it's going to take place from expecting the new regulations to come up by December and moving forward. So the regulators pushing all the markets to give more information, to invest on technology, so that investors can have access to the best products they have on table, independently on which is the distributor, which is the issuer of the notes or of the product. So that's going to be good. And it's interesting that when we have regulators making the movement, I would say to the right side, to the right direction, and we have technology on our side, things move faster. So I strongly believe that by the end of the year into next years, we're going to see a lot of changes in Brazil in the marketplace, with new players coming in, and also offering better services to the clients. So it's important to be aware of that, and it's important to understand what technology can offer us in terms of new tools and new developments, so we can provide a better service to the clients.
Okay, so we have an idea that this year's survey, when we look at it, it would be better, right, than 2 years ago. Okay, Roberto, do you see the same thing? A lot of innovation for LatAm clients?
Yes, I think if you look at the regs market, especially in the US, compared to the US register market, it is going to be a market that, even though it's smaller in size, because it's not, you don't have to register in the SEC, it has always historically been a market where a lot of issuers are testing new products, testing new payouts, testing new indices, new types of trackers. So this is something that, you know, I think it has happened in my world for some years, and I don't see changing. I think like it's obviously a competitive advantage if you're an issuer and you were able to, you know, create a product that would be innovative and interesting to the clients, and in a way is cheaper than to the US client base, right? Like they normally just follow LatAm. Now, I think the key here though is to look at what understand what the distributor needs are as well, right? Because you can come up with a super complex payout, multiple barriers, multiple types of, scenarios, but it's going to be really hard for an FA to explain that to their client, right? So I think whereabouts a lot of this innovation is coming from, financial engineers. I think like the commercial part needs to be an integral part of this drive. And I have seen that changing for sure. I think now when I talk to my structurers, they're always thinking like, okay, like this, they're always try to be in the head of an FA or of whoever is selling the product. And I think that's important, just because we all know that, if a client, holds 20 products in their portfolio, but they have one bad experience with one in which they didn't understand what they were buying, that's gonna move them to never buy a structured product again, right? So I think it's essential to have the innovation an integral part of also the client needs.
And what about Mexico, Damian? What are the main innovations that you are seeing?
Well, in terms of innovations, we've been working in the last couple of months in trying to issue things related to this new TIE, that it's a daily funding rate, just as Liver is moving to SOFR. Also in Mexico, we're also moving to a daily TIE. So we did issue, it was some kind of an exercise a week ago, and we did funds on demand. However, we're still working with a money market desk to be able to deliver something to our clients that has this daily PA funding. In terms of distribution, for us, it's been a little bit complicated to get our clients that are used to being very short-term notes to go to longer things in equity. However, in this last year, we have become very active distributing some autocallables, as you all might imagine, related to Tesla, Roku, Nvidia, all of these hot equities that everybody is talking about. And finally, we have been seeing some of our clients that were very engaged in these short-term FX notes moving towards this kind of notes. And in terms of processing and how everything has changed with all of this home office, I think how we approach not only the sales and the clients, even the back office has changed a lot. Back when we were all in the office, we used the phone, we would speak to people, and nowadays I reckon my colleagues have a similar experience. It's all about Teams. So we have had to adjust all our processes to be able to be more efficient on how we close a note and how we report it to the back office, so all the flow moves in a smoother way. So we're really happy that we have found in these new tools that we're using every day now a very good support to start developing this further.
Okay, and finally, Steve, would you like to add something on that with the Peruvian outlook?
Yes, thank you, Liliana. Actually, well, Zest, we are a very high growth company. So the good thing about being that is that we still can be very close with our customers, and not only customers, investors, with all our stakeholders. So we receive constantly a lot of feedback, and that feedback we take it into account to be more efficient in every part of the whole change of value that we give. So, for example, in the part of products, we have been very active on taking the opportunity, not in volatility, because as I mentioned, we haven't invested a lot in the region where volatility probably has increased. But broadly talking, for example, in inflation, we have moved most of the portfolio taking advantage of companies or positioning in terms of, we know that the rates are going up, so we decrease the position in fixed income. We increase the position to enhance yield, to take opportunities in that side. So we have been listening to our clients and give that protection. Also, we take into account all the political noise in Peru and in the region. So we migrate our custody into offshore right now by Pershing. And also they were speaking about all these fears about only having this local fund or regional fund. So we are also implementing an international fund for them to have the alternative to be outside of Peru, but with the same product. Another thing that is very important that we have been doing is on the education. We know that structured notes is a complex investment because in Peru, and I think in the region, the financial education is not that very common, broadly talking. I mean, like, there are a lot of people, very high talent, very intelligent, but they are very technique into their positions. So a lawyer is a very good lawyer, but probably that's it. It's probably hard to find a good lawyer with good financial skills. So we identify that there's a natural synergy with moving the product or moving our asset management with the education. So we have been doing what we call Zest Café. This is like it's a way where we can have we can be very close to our clients, not only our clients, but our distributor and other stakeholders. So they go into this place and we talk about finances, we talk about structured notes. We also have Bloomberg there where we can teach and give more transparency to not only our portfolios, but to what this type of investment involves, because it's kind of hard to understand, okay, what's volatility, what's the credit risk of the issuer, and there's a lot of different type of variables regarding structured notes. Also, I think Luciano mentioned about technology, and I think technology is a key to complement and give that support to our clients, and not clients only, distributors too, where they can have more accessibility, very fast, very easy, very user-friendly. So we also launched our app the last 2 months. We finally finished and launched it for our clients. We do a lot of operational efficiencies. We have like a lot of services that interconnect. So for example, if you compare our back office to other asset management back office, our team is very small, and it's not because we want to be a small team, but it's because the technology and the services that we have already implemented give that ability for us to make a higher scalability, but using less people. So I mean, like, we're very focused on that, and transparency, giving the tools not only to our clients but to everybody that is nearby, so they can have a better experience having Zest with them. And finally, we also have created a very small fund regarding capital venture in the region. So we identified, I mean, I think everybody is looking to the same, but there are opportunities in the region. I mean, like, these left-wing parties that have been growing in the region have affected different type of asset prices, and not only asset prices, like talking about investment on buildings and real estate, but also on companies. So we have this small fund with free investment, and we are very active to receive contact of new companies that want to see opportunities to increase their venture capital. So as a wrap up, yes, I think it is very important to have very close contact with all the stakeholders, not only the customers, and work in that direction, because structured notes is a complex investment. I mean, like, probably in the US it's more easier because they have a lot of different type of alternative, but in LatAm, what we see is that, for example, Brazil have their own characteristics of structured notes because the rates are high locally. Most people invest in local currency, capital guarantee. In Peru, it's a different issue because most of investors invest in hard currency, and in hard currency you don't have that high rate, so you have to invest in different type of structure. Mexico different, Colombia. So I think if you try to consolidate, you have to be with a very high knowledge of what is the type of investor in every country, but that will be.
Okay, Steve, I think I'm going to steal your Zest Café idea. So I will adapt it to Mexico. I think it's a very, very good idea. And well, now we are just about to conclude the session. We have 5 minutes, and we're thinking that maybe we could take one of the questions. We have several, but I think we can take just one. And it's basically about FX. So if we can, maybe Luciano and Damian answer this, and just maybe give you 1 minute each to answer this. So the question is, can you develop on how clients are integrating yield products like the ones mentioned, like double no touch in the portfolioos? And do investors still have appetite for capital protected products, or with current rates, have they been killed? Who wants to take it? Maybe 1 minute each.
I'll start. Well, yeah, as I mentioned, there's a lot of clients asking for these double no touches, especially as the interest rates were low. But as everybody knows, now that interest rates are starting to move higher, I think we're going to see more and more people looking for capital protected products. In environments with extremely low rates, as other countries have, there's no way you can offer these kinds of products. But now with rates especially how they are in Brazil and in Mexico, I think it's more achievable to offering them this kind of products, and that's what I think people will be looking for in the next couple of months. And in my case, it's mainly shorter terms, like between 2 to 4 weeks.
Luciano, what about Brazil?
What I think about it is like the structured note markets in Brazil has always been, I would say, a capital protected product market. So we have very, very little share of products that put some capital at risk in Brazil. So investors use these products to diversify, but to keep some level of protection. What has happened when we had that period with low interest rates is that investors were willing to have longer maturities on their notes. So we saw some notes moving to 2 to 3 to 5, even 7 or 10 years maturities over that time. What I believe now, with interest rates moving up again, maybe those maturities will shorten to maybe back to 2-3 years the most, because it's going to cost a lot for investors to have only a capital guaranteed over 5 years with a higher interest rate. So I think that will be the change, but I still believe the market's going to keep like a capital protected market product in here.
Okay, maybe we have time for one more question, or maybe some closing remarks by Roberto or Steve. That would you like to add something to this capital protected question?
I mean,
1 minute.
Just very short from our side, as Luciano mentioned, I just want to emphasize again, every country has their own peculiarities. I mean, in Peru, it's very hard to do capital guarantees because, I mean, the products that we compete in Peru usually will have an average of yields in hard currency from 4% to 10%. So on that side, capital guarantee in the expiration will be very low yields. So that's why we in Peru don't see much space. But broadly talking, yes, there's space, especially in Brazil or Mexico too also.
Okay, I think we're about to close. So very quickly, Robert.
Yeah, I was going to say that it would be very nice if I could offer principal protected notes in dollars, but the reality is it's impossible. I mean, you're going to go 10, 15 years. I do think in hard currency, when you look at hard currency, more than like principal protected, it's always going to be important where credit is trading and where rates are trading for my clients. A lot of structured product buyers in the region are fixed income in types of historically investors. So if nothing is really paying on the credit side, that's when we see an increased flow of structured notes, like yield, especially yield types of payouts in structured notes.
Okay. Well, I think we have to wrap it up today. So I would really like to thank you all for the very interesting conversation and the perspective throughout the region. And well, thank you very much. And thank you to SRP as well.
Thank you very much, Liliana, for moderating this session. And thank you to all of our speakers for invaluable insights shared with the audience. Dear delegates, we hope that you enjoyed the session. We're looking forward to seeing you at the next one, a panel discussion addressing recent regulatory compliance and tax development, which should start immediately at 11:20 Central Time. Nos vemos en la siguiente sesión, la cual empezará a las 11:20 hora central. Muchísimas gracias a los estimados ponentes y a todos los regulatory compliance and tax development, which should start immediately at 11:20 Central Time. Nos vemos en la siguiente sesión, la cual empezará a las 11:20 hora central. Muchísimas gracias a los estimados ponentes y a todos los regulatory compliance and tax development, which regulatory